So this is the AUD yen, Australian dollar Japanese yen analysis for the 6th of October. This analysis has been done on for EOD end of day trades. Now, if you have been watching the videos recently, you'd have seen I've been caught. I've been clipped a couple of times by this currency pair. So first, I took a long trade, and first I took this short trade over here on the 28th and was stopped out for a loss. We then got a signal to take it long, to take trades long. We took that, and this very next day, which was today, we were stopped out. So, as you can imagine, it has been pretty frustrating using this system, most recently to trade the Australian dollar, Japanese yen. But the system requires you to take all the signals because you know it pretty much works in these markets. The signal you don't take ends up being the one which provides the most profit, which would have covered all the losses you would have made from the ones that have not worked out. So, for example, let's have a look over here. This is an example of a trade working out, like the 14th of June. Okay, so we closed at 83.15 and we didn't get a signal to exit to 87.45. Imagine that, right? Look at that. Let's just have a look. 87.45 and 87.45 from 83.15. So you're looking at 30. You're looking at 430 pips roughly, about 430 pips. 430 pips. Even though you have given up quite a bit here, you're looking at 430 pips to the upside that you would have traded, and yeah, it's so this trading system does provide you with some pretty good trades, but then even though you do have occasions like that, you also have occasions like this over here, where between let's just see where that is, between the first week of the year in January to mid-March, the market has essentially been in a range, and you'd have been chopped up with these signals. So it's not really cut and dry. It's not really cut and dry, this system. But yep, let's just work with levels we're given now. So let's just get into this. Okay, and there is the candle. There's our signal candle. We're going short. So where is our open? So where did it close? We closed at 8793. Let's get the 8793 on the chart. Oh, hold on a second. Get rid of that. Get rid of that. 8793. Let's get the 8793 on the charts. So 8793, and we're going to change that to an orange, and we're going to make sure it is at 8793. 925. That's good enough. 925. I'm not going to get crucified for that. Let's just see. Where is it? Where's our high? Come on. Our high is at 88.74. 88.74. So let's just put our stop up there. 88.74. No, that's too far away. Yeah, that's close enough. Let's just get that right. Let's just get the color right. So our stop, we're gonna stick that in pink. Our downside target, I suppose it would be this level right here. That's 86, isn't it? And if we change that to green, around about 86. So there's the levels, and we've got our stop up there at 88.77. We've got our entry at 87.92. Got a potential take profit at 86. Now, if I have a look at the other time frames, this would be contradicting them somewhat. So what have we seen? We've seen prices sell off on a weekly time frame from that 200 period moving average just there. But it sold off all the way back down into support of this black moving average here, along with the 20 period moving average. Again, we've come back up above the 200 period weekly time frame moving average. So the 200 period moving average on a weekly time frame, and we have sold back down, and that's currently what we're doing. And I've got a pretty modest target of 86. A very ambitious target would have been 82, but we're keeping it pretty conservative, a target. So the problem with going short here is it is counter to the overall trend of this market. This overall market has been, as you can see on the weekly time frame, we've got the low, we've had a higher low, we've had another higher low. This all been building up beneath this 200 period moving average. Now, usually when you have prices posting higher lows, slightly higher highs, all the way into resistance that's been tested a couple of times, it's not reasonable to expect prices to eventually break out to the upside. So you might see prices come back down a little bit, but it's just a bit of respite before it breaks to the upside. This is a look at the monthly time frame while we're here. On the monthly time frame, we do appear to be in a small range, but it's a range big enough to trade. So we've got the bit of concern would be we've got our lows over here, and we've had a higher low there, and we've had a push up, and we appear to be forming a bull flag before prices continue to the upside. Now to the upside, I'll be looking at 100, but my signal is to the short side, and that's due to, yes, my bias is to the short side based on the signal, and that's the reason I've got a conservative target on the Australian dollar Japanese yen. So that should wrap it up for the Australian dollar Japanese yen. Like, comment, subscribe. Thanks for watching.